everyone. This is Sophal Pettit. Welcome to our first CSP podcast coming to you real on anything about finances. And today I have the privilege to interview my son-in-law and my daughter about how can they merge together with their finances when they used to be single and now they just got married. Maybe you wanted to introduce yourself a little bit or no?
Yep.
Yeah, go ahead.
Hi, I'm really happy to be here.
Hello, I am Kevin. I'm ready to get into the questions.
Get into the question. Okay. So, you both used to be single and you handle your finances separately. And now, since you got married about what, half a year ago, and how do you handle money now as a couple, two into one?
The first thing that we did was combine all of our accounts and just talk about like what we do with our money, because when you're single, I think it's really easy to just keep track of it by yourself. You only have to communicate with yourself about what you're spending money on,
Hmm.
and then you get into a relationship, you become married, and now you have all sorts of other expenses that you might not even be aware about. Like if Charlize goes to get lunch, might not even know about that. So you have to be able to communicate and budget for other things. So the first thing we did was combine our accounts so that we can actually see the activity, what's going in and what's going out, and create a budget, and then talk about whatever unexpected expenses are coming up or things that we want to purchase that might be like larger things that could affect our budget, that we keep each other in the loop of what we're doing. But I think the major thing that we did was combine everything and have all of our like credit cards running through the same accounts so that we can see, we have to pay off these cards this month. We have this much money in the accounts. This is what we're earning. This is what we're spending. I don't think we'd be able to like keep track of that at all if we didn't combine our accounts.
Mm, it's good. It's good to hear, young couple like you coming together as one and not just as one in a marriage, but as one in your finances. And that make life a lot easier. What about you, Charlize? How do you feel about that?
For me, I lived at home with my family before moving out on my own with my husband, and I had a set of new challenges where before I only had lifestyle expenses, so I never worried about rent or groceries or anything like that. And now I have to think about our budget and there's more to keep track of, and I prioritize what we need. So like a wants versus needs conversation. So another thing that we did was we looked at our software called Retirement Analyzer, where I created a joint profile, whereas in I had my own profile before being married to Kevin, and now created a joint file. We might think that we're within our budget, but then you actually put in all the expenses and then you realize, oh, actually, you know what? We don't have enough cash flow for these things. And so then we can just adjust from there. And it was really eye opening to see because I actually spent a lot more on maybe things I don't need, like shopping and stuff like that. And I'm like, okay, I have to readjust that. And really like being able to see all of our accounts in one place so it keeps it organized, because now it's like we have to add each other as joint account holders on like different credit cards or different bank accounts, and that can be a lot to keep track of. And this just helps me like keep things organized, and I like personally like keeping our finances organized, and I love communicating with Kevin about it. And if there's anything that again like we want to spend more money on, or like a trip that we want to go on, we have to talk about that ahead of time and save for that. Whereas in before, I just would just spend the money and I didn't really have to worry about other expenses. So yeah, I guess for me, it was very eye opening to just look like actually budget and plan and actually think about what I need versus just
What
what
you
I
want?
want. Yeah.
Yeah. I mean, I kind of know you because you're my daughter. So before you probably didn't really have to think about, paying for your rent, your other expense, except, your own expense for miscellaneous stuff, your clothing and your maybe gas for your car. And I think that you have that privilege that you live, but also I noticed that you also very mindful about your money as well. You save before you spend, which is a very good habit that you begin your life with because your dad helped you through that. So that helped a lot. And but when you come together with Kevin, now your finances and Kevin finance just merged together as one, how do you feel that is more complicated for you, or got a lot easier to deal together as one than separate?
I definitely think combining all of our accounts was the right thing to do, and it was important. And we actually talked about our finances even before we got married.
I mean, Kevin, you can chime in. How do how do you feel when you were like just, you got your set plan, you know exactly what you spend on every day, and I think most men like you, they do have their set plan.
Yeah, I mean, I'm pretty habitual. So like I when I was living in the city by myself, I would get a turkey sandwich every single day for lunch, and
That's
and the
funny.
only thing that I might change, and it would actually like shock the cashier if I changed from like pepper jack to provolone cheese. They'd be like, that doesn't even make sense. You always get pepper jack.
Hmm.
So I mean, I was really regularly doing the same thing every single day, which of course, like that lifestyle is not exactly conducive to being in a partnership and a relationship. But I think that both of us have like pretty good, healthy spending habits.
Yeah.
Neither one of us is like spending more than we have or making unnecessary purchases, racking up our credit cards or anything like that,
Hmm. Hmm.
which makes it a lot easier to communicate and stay on the same page because
Yeah.
there's not like a lot of upset. I'm not like, oh, I used to only spend $7 a day on my food and now we're spending twice that or a little bit more than that.
Hmm.
It's not really a problem because, well, we need groceries. We just have to make sure that we're accounting for what groceries we need and how much is that going to cost us, and is it going to fit into our monthly budget.
Hmm.
But we're never having conversations like somebody's spending more than we have or making irresponsible purchases
Hmm.
because we talked about, like Shirley said, even before we got married, like we talked about what financial habits do we have and how are we going to spend money and use our money when we do get married, what things are important to us, what do we need to prioritize.
Hmm.
So I think that it's been pretty smooth transition. Like obviously our habits have changed. I'm not
Hmm.
getting a turkey sandwich every day, and so our spending habits have changed, but not in a negative way at
Hmm.
all. We just merged our accounts and we talk about what we spend and we don't spend irresponsibly, so it all works.
Yeah, that's you guys basically answer my second question was about, what financial goals did you discuss before getting married, right? So you guys answer that question, and I think that it seems like both of you are very mindful about your finances, and that help a lot when you merge together. You already have the same goal, the same plan, and the best part is that you were able to be okay to merge together. That's what marry is all about, to become one and everything else become one as well, so that you can see where you're going together. So that's lead us to our next question here. How do you envision your financial life together in 5, 10, 20 years from now?
It's a good question. Well, currently I'm in school, so hopefully my earnings potential increases in 5 years after I graduate. But I don't think like fundamentally that our behavior is going to change that much. Our lifestyle may will almost certainly increase as our earnings increase, but I think we're still always going to be prioritizing saving in our qualified retirement accounts, putting money in our emergency fund, making sure we have enough, spending below our monthly income, same credit card habits. I don't anticipate any of like those fundamental behaviors changing, just that our expenses will probably grow as our income grows, but probably not too much.
So, my non negotiables right now are to save and to save in our Roths, max out our Roths every year, to max out any other retirement accounts like a simple or 401k or an HSA, and to have at least 3 to 6 months of emergency expenses in our bank accounts. And from there, we can either discuss saving for something in particular, like a trip, or like right now, we want to buy new furniture, or in the future, you said like 5 to 10 years or longer, hopefully a home. And so we have to do things now to have those things in the future, and we have to build good habits now. And I think that if you aren't saving, building those habits, that it's going to be harder in the future. And we're young, but you should be thinking about even saving for retirement, because time goes by really fast. And if you aren't taking advantage of, the opportunity cost and the time value of money now, it might feel like too late, or you have to catch up later. And so I think right now, as long as we're saving as much as we can, and then also, you also want to like live your life and not always just focus on the future, because you want to be present and you want to have a good life now, but you also want to make sure your future secured. I think that it's just important that you prioritize what's important to you, and you save, and then you budget, and then yeah, I think that that is what's going to set us up for a really great and
Success.
yeah,
Yeah.
bright future.
Yeah. So it looked like that you're the one who handle the finances in that area of your marriage.
Yes, my
Mhm.
parents taught me well, and I'm thankful because even before Kevin, like my dad said, you have to be saving in your Roth. And like for example, I wanted to move out with some friends and get an apartment, but at the time I wasn't bringing in enough cash flow to do that. And I was like, well, if I just stop putting money in my Roth, I could afford that. And my dad said, no, you can't do that. So you have to find a way to either make more money, you can't move out basically. And I'm very thankful that he actually did that, because it taught me that I shouldn't compromise on my savings just to have something now.
Yeah, that's a good one. Good point. That's, a lot of people like to have things now, but then also when they have things now, they sacrifice their future. I don't know what that future look like, but they sacrifice something for now. So is it worth it to do that? So that's a great, questions and answer. So that's lead us to our next question. What is your individual relationship with money, and how do those perspective align or differ?
I think probably maybe the biggest difference is I'm a little bit more like passive, and Charlize is more active in managing our finances. So like I would have my credit cards on auto pay. I'd have whatever my Roth contributions are set up, and then I just won't look at it, and I'll just know that the credit card's getting paid off because I know I'm not spending as much as I'm making. I know that my Roth contributions are going in, and Charlize is a lot more active. So like each month she wants to look at what are the actual expenses that are taking place on the credit card. Do we need to adjust anything? And taking like more frequent looks at that.
Yeah.
And I was not doing that at all. I would just be like, yep, auto pay is set up. I know I'm not spending more than whatever's going on the card in the first place.
Yeah.
So it's all good. And that was kind of my relationship to
To
money
money. Hmm.
prior to our marriage. Now I am not as active as Charlize, but since we talk about it, and if she's active, then I'm involved. So
Like he asked me if we can do something, or can I look at our accounts and make sure that we could actually pay for something or things like that.
yeah. If there's anything big that's coming up, I always want to look at the accounts and see. I never want to spend money that if we don't have the money like sitting in our checking account, then I don't want to spend it. So when bigger things come up, I'm definitely looking at it. But on a day-to-day basis, I'm not looking at the checking account to see if I can buy lunch or something like that. I just know that I could probably spend at least $30 a day on food, and I rarely, if ever, even spend that or more than that. So no, there's no issue that I foresee like happening with something like that.
Hmm.
Yeah, I think I don't know, what is your relationship?
Well, a good example is Kevin had subscriptions, and
Oh
I
yeah,
didn't
I'm the
have
worst with
any.
those.
Yep, I didn't have any subscriptions, and he'd have subscriptions to things that he's not even using, like a pickleball court where
Oh.
he was just spending like $8 a month, and I'm like, I know it's not that big of a deal, it's like $8 a month, but I'm like, for a whole year or even years to come and you're not even using it, you should just cancel it. And so I had him cancel like a lot of subscriptions. Or he even found things that he was paying for that he didn't even know he was paying for.
Oh, wow.
Like our Verizon Wi-Fi, within our Verizon Wi-Fi, he was paying for Disney Plus, and he had no
Yeah,
idea.
I had no idea.
And that was costing like
It was
quite
actually
a lot more.
it was like $15 a month extra.
Yeah. And he canceled that. And I think we just like are able to help each other find those things. Because I always look at our credit card statements, because what my dad had me do when I was younger was look at his credit card statements and check to see if if there was anything out of the ordinary, like maybe a purchase that he didn't actually make. So then if he needed to contact the credit card company, he could get it removed or something like that, or just to like make sure that everything was correct. And I think those helped me to pay closer attention to the details. So every month I always check our credit card statements. And another thing is we always pay our credit card statements off at the end of each month. We only use our credit cards really just for the the perks, like the benefits, like a cash back or points or something like that. So we never abuse that, and really just like to build our credit and things like that. And we manage all of that like really, really well. And so I'm really glad that we both have like good habits around that. So that wasn't a challenge at all, adjusting. But I think the biggest challenge was there were expenses to him that he's like, oh, it's no big deal. But then to me, I'm like, no, we should cancel that if we're not using it, or we shouldn't pay for that if we don't need it, or we should get rid of that. And I mean, even like, for example, we moved and he's like, we could just donate our furniture, or get rid of our furniture. But I was like, no, like, let's sell our furniture. Like, I'll try and sell it online and see if we can get something. And we did. And he's more like, oh, it's fine. It doesn't really matter. And I think I'm more like, I'm trying to capture the dollars. And so I think that was like the biggest difference, but also like it teaches both of us. Like I think for me, it's like he teaches me that
Don't have to worry too much
yeah,
about what's going on, right? But I think that you brought a different perspective for Kevin, because that's what make it so great about two become one, right? So that she can see that the things that going out that are unnecessary, and then you also ensure her, that's, those part of the things that in the past. That's why you're so easy to release their responsibility to Charlize to handle it. For me and your dad, he's very detail oriented. So I wasn't, don't have to worry, but he's so good at it, and he loves it. Unlike me, I'm dread doing that. Like I'm sitting there at my couch and going through my Nordstrom expenses just to make sure that, all the charge in there are correct, because I pay everything up front. We don't owe anything on credit cards, so which is a blessing. But I couldn't say that 10, 20 years ago we were owe tons of stuff on credit card, because we live on credit card for a longest time. But the more money we make, we were able to make better choices. Well, we start making better choices when we know more. And so that's what happened to us. We got to know more, and we learn about our experiences. Thank you for sharing, Charlize, because that's it's important to elaborate on how detailed you are to make, it works for both of you, so that we can hear that Kevin willing to release his responsibility on that part to you, so that you can handle. And a lot of time it's easier for one person to handle, but if you acknowledge each other's strengths and weaknesses, and that make the couple work so well, right? And you can talk about everything in your life. So thank you for answering that question. But let's lead on to our next conversation about income and expenses. Have you created a household budget that includes share and individual expenses?
Yeah, that was one of the first things that Charlize did, was set up a retirement analyzer. And we looked at like past statements, past credit card statements, and like recurring bills like utility bills, internet, rent, and we put it into retirement analyzer and came up with our budget. And now whenever something changes, we go in and we update that to see what do we need to change. If maybe our internet bill, well, we just moved, so our rent increased, right?
Mhm.
And now we have to look at, okay, does this still fit within our budget in retirement analyzer, or do we need to decrease our lifestyle somewhere else to make it work? That was first. I think we even did that before we got married, right?
yes, we did.
Yeah.
That's good. How do you plan to manage joint versus separate accounts for finances? Do you have one, or you don't have separate accounts, right?
Well, I think you still have your individual check. We didn't close the accounts because they don't have like minimum balances
Mm-hmm.
that are needed, but there's no money in them. They just are kind of like
Oh, okay.
They're just like sitting there. So like effectively, yeah, we don't have individual accounts, but somewhere out in the ether, like there are open accounts that are
Oh, okay.
Yeah.
individual. We just changed all of our direct deposits to our joint account. We really only use the joint accounts,
Mhm.
but the other ones do exist. And like you have your business account,
Yes.
obviously I'm not on that.
And I do have a credit card where he's not a joint account holder or joint card holder. And I use that for example, like if I decide I want to pay for something over time, I will use that to like connect with my afterpay or something like that where because that's another difference is where he would pay for things in cash or like fully upfront, whereas then for me, I look for 0% interest, pay over time type of things. And I even do that with clothes or furniture or anything like that. Like anything that it's a little bit more, and I will use that for it. And so he can't really see that, and so that's something that like I have to communicate with him. But other than that, I don't think there's anything else.
Yeah, I think you probably more of looking out for opportunity costs. Like using zero interest rate as possible, using others people money while your money is working for you still.
Yeah,
Yeah, I think you're probably looking at that aspect. And Kevin, in the other hand, he's just like, we have the money, just pay for it.
right.
So you lose the opportunity cost.
Right. So like
That
dad says, anytime you give up a dollar that you could have otherwise kept, not only did you lose the dollar, but you lost the interest that that dollar could have earned you, or the interest on the interest called compounding interest. And that really stuck with me. So any opportunity that I get where I can pay over time but 0% interest, I will take advantage of that.
that's a good way to look at it. This other question here is about, do you both have an understanding of each other income benefits and potential for growth?
Yeah, that's all in our retirement analyzer also.
That's good.
That's it. Yep.
Yep.
It's gonna sound like a promo for retirement analyzer.
Like
Yeah.
there's too many cash flows going in and going out that if you don't have it actually put in a place and you don't keep track of it, like there's just no way you can actually do that in your head.
Yeah. So you both are very intentional about your finances. You have a roadmap to going forward. Here, the next question is, are there any outstanding debts like student loan, credit cards, etc., you bring into marriages?
Fortunately, no.
Hmm. Good, good.
Yeah, we did talk about all of that before we got married. So when we were just dating, we had all of those difficult conversations before. And I do think that's actually very important, just so that you know what you're doing when you are combining everything. And yeah, I don't think you should be afraid to talk about those, even if it might not be that good. Maybe you do have debt or bad credit or just a lot of student loan debt. And it's important to, I think, be honest and communicate with your partner about that.
Yeah, I think that if you cannot be honest about your finances in your relationship, then you shouldn't get married. Fortunately, we're talking to the couple who have parents that are leading them in the right footprints so that they don't make the same mistake as themselves. And Charlize did a good job following through with that, and Kevin as well. So, they can only share from a perspective of how their relationship was able to talk about the tough conversation up front. Let's lead us to the next question here. How do you feel about taking a new debt in the future, such as for home or car?
I guess whatever it is, home, car, or some other large purchase going in debt or taking on debt has to be part of a conversation about like what are our goals and is this debt necessary or like really helping us achieve whatever goal we want? Because I think that you could take on debt for something that's maybe not the best idea,
Mm-mm.
and then you could take on debt for something that may be a better idea. Like having a home is something that is important to us, and we want to have a home eventually. We probably don't actually want to pay cash for that. We want to take on debt, and
Well, and there's good debt and there's bad debt.
yeah,
Like Shirley said, it's good debt and bad debt. And when it comes to your home mortgages, it's considered a good debt.
that would be fine. I think that's important to us. That it's a better option than buying that house in cash. I don't think that that's an issue, but it does need to be part of the conversation of how does that debt like fit into our budget. I guess ultimately we would probably plug it into retirement analyzer, figure that out.
Yeah, that's good. What about car? You think you're getting, you pay your car off, like those are big purchases? Do you?
Well, for example, right
Yeah.
now, I sold my car when I moved, and I decided not to get another car because I don't need one. I work from home. I don't need to be, going out and about. And we just share a car, and Kevin uses it most of the time, and we plan accordingly. And I don't see us getting one right now, but in the future, we probably will need another one. And when that time comes, definitely we would discuss that and financing it and making sure we're, also getting a car that's reasonable and that would actually fit within our budget. And I don't think we would ever want to get something that we know we can't afford to pay for. I don't think we would ever want to risk getting into like credit card debt or anything like that. Again, we would have to have a wants versus needs conversation.
And also, what do you do with the money that you sell your car?
Yeah, I sold my car, and instead of spending the money, I decided to put it in a permanent life insurance policy because that was another topic that Kevin and I discussed was getting life insurance because of course, when you get married, your lifestyle increases and your cash flow increases because now you have two incomes. So if one of us were to pass away, there would actually be a financial burden because we wouldn't even be able to afford where we live or what we do, without both incomes. So it's important that we set ourselves up for success that in case of one of us were to pass away, because of course you never know. And there's a lot of unfortunate things that could happen and happen all the time. It's important to protect ourselves. And I put the money in a permanent life insurance policy to use the cash value in the future for, let's say, a down payment on the house or for a car or any large purchase. And if I can't get, a interest rate that's lower out in the world, I could always use my policy and take a loan out and then pay that back over time. And that can be, growing for me and I can use that for my advantage in the future. So that was really important to me. And again, my parents are a huge influence on my financial decisions. And again, I talked to my dad about it and I trust him and his advice and things like that. So I think that was for me like the right decision for the both of us. And I'll be able to use that in the future.
That's good. That's good that you follow your dad's advice. So, lead us to the next question here. Have you discussed like strategies to maintain a healthy credit card score? We talk about score all the time because I used to teach you about, hey, before you date that guy, make sure you get his credit card score, credit score, because your score is very important for you because it's also represent who you are and your character as well. So, have you discussed the strategy to maintain a healthy credit card score as a couple?
Yeah, we actually talked about that a little bit, and we almost, I don't know, this is personally how I view the credit score game. I think that like you can get a 750 credit score by just being like responsible with credit, but then to get into the 800s, you almost have to like game the system. And so we looked at like just what are the different factors that can affect your credit score, and we just play within those parameters as much as possible. But we're not like actively trying to increase our credit scores to the highest possible just because I don't know, it seems almost like you have to game it at some point. It seems like one of the biggest factors for your credit is your utilization rate. So if we want to get that lower, maybe the best way to do that would actually be to get more credit, like get bigger credit lines and maybe open more credit cards. And for us, it just, I don't know, it seems like maybe something Charles might say, like it's not, the juice isn't worth the squeeze on that one.
Uh,
So I think we have good credit spending habits, and like we both have excellent credit. So we just keep our behaviors in that realm.
Yeah, and I never thought about my credit score before Kevin. Never paid attention to it. I didn't even know all the different factors that could impact your credit. And then when we combine everything on the bank that we use, you can actually check your credit score on there. And so now I actually check it because what I was using before didn't have that feature. And I see if my credit is dropping or increasing. And I actually really like that because you like length, like history of credit and length of credit and the amount of credit that you have, all of those things impact it. And I didn't really know that before. So now I pay more attention to like how much credit we're using. And it's like fun to like be able to try and like increase it and do better. But again, like I don't also like having too much to keep track of. So like if I wouldn't personally like want to get more credit cards just so I could increase my credit, like I would rather just not worry so much about managing all of that. So it's not as high of a priority, but as long as we have good credit, so then we can get like better interest rates and things like that, I think that's important.
Yeah, I think that's good. Yeah, our next question is understand the saving and investment. So, do you have an emergency fund? And then how many months of expenses would you like to cover?
Yes, we do have an emergency savings account, which also is earning an interest rate, which is great, like a higher interest rate than 0.1% or something like that. So we just let that sit and grow for us. And we like to have at least 3 to 6 months of monthly expenses in that account. And if for some reason we're not at that, then that means like we have to cut back and we have to make sure we rebuild that account. Or if there was a unexpected expense that came up that maybe drained the account, then we need to make sure we rebuild it. And that's definitely the highest priority because you do want that cushion in case anything were to go wrong. And we don't want to use like our retirement accounts as that cushion. Like we could take money out of our Roths or non-qualified accounts, I guess, but we don't want that money to be tied with our everyday lifestyle expenses. So we just pretend that that money doesn't even exist. Like we're just like we're broke. Like
Yeah.
that's like what it is. It's like we're broke. Like we think about it and yeah, we just have to make sure that what we have in our accounts is what we could use like in case of an emergency.
Yeah, that's good. Good. Yeah.
Yeah, just like our checkings and savings is our operating money. And then all of our investment accounts, those are like strictly off limits, like emergency money. And then we have our savings account, which is our emergency, like operating cash. Where, like Shirley said, if we don't have 3 to 6 months of expenses in that account, then we're actively saving extra to build that back up.
Yeah.
Awesome.
And for example, we just moved to a new apartment and we were not happy where we used to live and in the apartment we used to live in, but we had a year-long lease. So we actually decided to break that lease and end it early, and there was a penalty fee for that. And thankfully we had an emergency fund, so we were like, you know what, we cannot live here anymore and we need to get out basically. So we just decided to use that money for that, and I'm very thankful that we actually had that option because some people don't have that option and it's like you feel stuck and then you're forced to basically live out whatever, like, but you are forced to stay in the situation that you're in, and very thankful for like that flexibility or that freedom, have a choice.
So, have you started saving short-term goals like a vacation or down payment on a home?
We are actively saving for a vacation for our first anniversary. And that comes after this year it has been a relatively expensive year with our wedding and honeymoon, but now we wanted to go on another trip for our first anniversary, and we're saving up for that to see if we can make that happen.
No, that's good. Very good. And how do you choose to save for that?
Well, first we look at our necessary expenses like our rent, our utilities, our internet, food expenses, things. Also, we're prioritizing a bit of our health, so we'll probably throw some gym memberships in there, and then whatever's left over basically is going to go into savings. And then at least that way it'll be like an active decision to take the money from the savings to purchase something that might be in the want instead of the need category. Instead of defaulting to make the purchase and then save second, we'll prioritize saving first.
Okay.
Anything that's over our necessary expenses.
Yeah, and one thing that I do use my reminders app on my phone to make lists of things that I want and I categorize them. So clothing or furniture or just like household items, actually make lists of the things that I want to buy, and then I prioritize them. Like what do I need now? What could I wait for? And that actually is super helpful because it helps me not like impulse buy. So if I go to the mall and I'm like, oh, I see a brand that I like, or I see something that I like, I write it down so I can remember it for later. And wait on that and like think about it and like, do I really want this? So I'm not caught in this like cycle of buying something, regretting it, returning it, and just doing that over and over again. So it's helped me be a lot more mindful of my purchases, whereas in before I didn't really think about it. If I wanted something, I kind of just bought it and I was like, okay, whatever. And so now I am learning how to be a lot more mindful. And then the other thing is, I think it's important to, if you have time, like to be able to have like a side hustle or something else that you're doing where you're earning, where you have more cash flow coming in, because any other cash flow, like extra cash flow that we have coming in, it can go into our lifestyle. So that also contributes to a trip in the future, something else like that.
Okay, good. Thank you. Well, that's very helpful, not just for the audience, but I know it's helpful for me to really be mindful how I shop, not running back and forth to the mall and exchanging it because I, impulse do a lot of impulse buying stuff, and now I'm a lot more mindful because I think I learned something from you. So, how comfortable are you with investing, and how do you have, and do you have any current investment beside your Roth IRA that you set up?
We're very comfortable with investing, and we both have Roth IRAs. I have an individual brokerage account also.
I have my simple with my job, but that will be changing to a solo 401k. And then I have my health savings account. And I also have.
You have a traditional IRA, and then I also have my 401k with my work.
Mhm.
Yeah, so we have. I think we're contributing to our investment accounts on a regular basis, and that's also like the way we think about that is our money from our incomes is going into those accounts,
Mhm.
the qualified accounts up to the limit
Mhm.
before it obviously reaches us. So that's like a built-in prioritized expense in a way.
Yeah. So you both have retirement accounts and you contribute to your retirement account regularly.
Yeah.
That's good.
But we don't do anything extra in addition to any of that. I kind of feel like we feel like that's enough right now, and we don't have any other accounts where like we're not doing any
Yeah.
stock picking.
Well, like I have my individual investment account, and I was putting like excess money for my savings there, but right now, like we're not saving as much. I used to be saving a lot, right? Because I was just living by myself, and I literally my only expenses were rent, internet, utilities, and like a turkey sandwich. So I was contributing to an
Your
investment. I
food.
really don't buy things
Yeah.
very often at all, but now that I'm in school and our expenses have increased, we're not contributing to investment accounts outside of our retirement accounts.
Okay. Yeah. So you both don't invest in crypto or anything like that, correct?
No.
Yeah. And I shed some light on crypto, Kevin, since you are
Shed some light on crypto?
licensed in that an investment field. You understand the investment, why it's so critical to not invest in crypto.
Yeah, I mean for our retirement accounts, that's not even like close to our investment objective, right? So we're targeting more long-term, like predictable rate of return for our investment accounts. And we honestly, we don't need or want the volatility that crypto has for those accounts at all. And then in my individual account, also still not investing in crypto there because it still doesn't align with our investment goals either. We're just not willing to take on the risk for the volatility in crypto, and those investment accounts we have more long-term investing horizon than maybe I guess some other people have some interest in like the high risk on volatility of crypto, but it doesn't fit our philosophy, our investing
Yeah.
philosophy. Yeah.
Well, good to hear. Yeah, I'm pretty sure a lot of young people listening to this, they can have a different perspective, how to create a long-term, less volatility on their money. So, what kind of life insurance coverage do you have, if you have any, or do you consider of having, you know.
Well, Mr. Charles Pettit told me that I can't marry Charlize unless I get life insurance. So I currently have a term life insurance policy, convertible term, and then Charlize has her permanent policy like that she was talking about earlier.
That's good. And do you think in your mind, do you think it's important to have those policy?
Yeah, I think the same thing that Charlize was saying earlier. When you get married, you are now responsible for each other's lives and livelihoods, and together, like, we are sharing all of our expenses. If one of us passes away, the other one can't keep living where we're living or maintain their lifestyle without the other, and we're responsible for each other. So I think that honestly, my term policy is cheap too, so
Yeah.
it's not. I think it's a good idea. It's necessary. We are responsible for each other.
It also takes care of if we live too long or die too soon. So if you can't do two of the 6 acts of daily living, you can use your policy for that. And it also has like Alzheimer's riders, fertility riders, different things like that that newer life insurance provides nowadays. And back then they didn't have any of that. So there's actually more benefits to life insurance than just a death benefit. Now you can use it for like almost like long-term care like benefits, or yeah, just like if you were to get sick and like
Critical,
let's
like
say, yeah,
chronic
yes.
sickness. Yeah. So you have answered the next question, which is I was going to ask you about your health, disability, and long-term care insurance, and you got the coverage that take care of all of that in one place, and it's such a good idea too that you got those while you're still young and healthy. And a lot of people, unfortunately, they lead, they didn't have somebody to help them look at those side of their life ahead and plan ahead at the older age. So, our next question here lead us to the future planning. And have you thought about, the financial implications of starting a family, if that's in your future plans?
Yes, so for us, we don't want to start a family unless we are able to financially provide for our family, for our children. And we would love to get a home and those things done first if we can. But of course, those are some things that you can't control or always plan for. So right now, I would say it's not something that we're thinking about or like doing anything about right now, but for sure we are thinking about that more like when Kevin's done with school or just like where we want to end up, like because not even just like with starting a family, but even when Kevin's done with school, where we would want to live more permanently and what our careers look like at that point. So we're thinking about all of that right now.
Okay, that's good. Yeah. Kevin, anything you want to add on that?
No, yeah, I think Shirley's pretty accurate. There's a lot that goes into that conversation of starting a family, like even just where to live and school districts and all sorts of other decisions. And so, we've talked about these things, but we're not like actively planning for that right now.
Well, you touch on future planning, so I don't have to ask you all that questions. You already touched on that. And then here is leading you to how to communicate and make decision, right? So how often do you plan to check in with each other about your finances? I think you answered that already, like once a month you guys check together, or how do you deal with that?
Yeah, I always look at our credit card statements every month when they come out, and we go over them together. We discuss all of that together. I mean, we're always talking about it. I mean, even
Yeah, we're
today.
talking about it like on a daily basis. When things come up, we talk about it. But we do, I think it's accurate to say we do like a review once a month of the statements, but it's not like we're not talking about our money or finances until that one time a month. We're usually talking about something, like money comes up pretty often. So, like maybe even multiple times a day, we're talking something related to money, finances, planning, saving, because it touches everything. So,
Yeah, it's a thread, that run through the fabric of our lives, includes, daily, everyday living. And if you don't talk about those issues, or not even an issue, if you don't talk about it, it create a big issues in life. So I only have a few more questions and we should be done and complete this conversation. Next one here, are you familiar with tax strategies that could benefit you as a couple?
Well, this is going to be our first tax year doing married filing jointly. So I do not know what to expect with that. I know that there are benefits, but I am still unsure of what all of that looks like. What about you?
Yeah, I believe there's like some marital deductions that we could take advantage of.
Yeah, and with our Roths taking advantage of our lower tax brackets and lower incomes and where we can still, even contribute to those accounts. So definitely taking advantage of all of that. Yeah, I'm looking forward to seeing what all of our taxes look like and
Your first year together.
yeah,
Yeah.
and moving for me, so new state, new everything. So not sure what all that looks like.
Yeah. So here we're talking about, comprehensive planning, how it impact, you as a couple, right? So it's so great to see that, a young couple like you, two individual people, two different people become one. And it could be very complicated subject if you don't talk about it. I think because you talk about it and you're willing to talk about those tough subjects, your love also grow as well. Do you find that true?
It gives
Or
me a lot of peace of mind when we're on the same page and when we talk about it. I personally don't like being left in the dark. I like knowing everything. It's really that's actually something I'm learning also like is there such a thing as knowing too much or over discussing certain topics? But I think with finances it's really important and personally it just gives me a lot of peace of mind and I'm really thankful that we both have that in common where we want to be on the same page and we have the same goals and it all aligns. So it makes things a lot easier.
yeah, that's good, Kevin.
Yeah, I think like we said before, money touches everything. So having open conversations about money, if you weren't having open conversations about money, then you wouldn't be having open conversations about a lot of things
Mm.
because you'd be like avoiding the money subject. So having open conversations about everything, including money, is for us has been really important to learn about each other, but and also like share ourselves with each other.
Yeah, and I also think talking about money so openly helps with the scarcity versus abundance mindset. And I don't want to be talking about money like out of like from fear.
Hmm.
I want to create something that's realistic, but also something to live into and look forward to and create the life that we love and not feel like we're so scared all the time, like we don't have enough or,
Hmm.
yeah, and just that that we can't talk about something. I think it's helped a lot with that. And yeah, we want to be in a state of abundance and we're very, very thankful. We're very fortunate and I'm thankful for all of our blessings. And it also takes like hard work. It takes discipline and communication.
Yeah, thank you for sharing that. So, what legacy do you want or long-term impact do you want your finances to create?
I don't really know if we've actually talked about that very much.
The legacy yet?
Yeah, the legacy yet. It feels like we got hopefully we've got a while to go before we're in legacy making mode. The first thing that comes to mind is just that we would want to be in a financial position where we can provide for our future children. And then after that, if we are in any like position beyond that, then I think we would start talking about like foundations or charities and what we can do to leave the world better.
I think honestly, the habits that we're building right now, that's something that I want to pass down to the next generation. Is I'd hope to teach our children what we've learned and that they can create generational wealth or also leave a legacy themselves. And I'd love to be able to leave them something as well as our grandchildren and so on. So yeah, I think that's as far as it goes for me about our legacy and what I see us providing for the future.
Yeah, that's good. And fortunately, Charlize got all this information because she's grow up inside the company that we create and she can hear all the plan upfront from her dad. Otherwise, she won't get to be as wise and as, mindful when it comes to her finances. So thank you for being here and thank you everyone for listening. And we're going to say goodbye for now. All right.
Thank you for having us.
Thank you.
Thank you. All right. Bye bye.